Most Americans think rich people just have better accountants. That's not true. Because while your paycheck gets taxed before you even see it, some of the wealthiest people in America legally live off millions, without paying regular income tax at all. And the crazy part? A lot of middle-class Americans are following financial rules that were never designed to help them build wealth in the first place. You work more. You earn more. You still feel behind. Meanwhile, someone making 10 times your income somehow pays a lower tax rate than you. How does that even happen? And more importantly, why does almost nobody explain it clearly? Because once you understand how the system actually works, you stop looking at money the same way. Before we continue, a quick note: this video is for educational purposes only. Tax laws and financial situations are different for everyone, so always do your own research or speak with a qualified financial or tax professional before making major financial decisions. Every year, millions of Americans do the exact same thing. Wake up. Go to work. Get paid. Watch taxes disappear from every paycheck. Federal tax. State tax. Social Security. Medicare. Before the money even touches your account, part of it is already gone. And for most people, that feels normal. Because that's what you were taught. Work hard. Earn more. Pay taxes. Repeat. But here's what quietly confuses people. The richest Americans often don't rely on income the same way normal workers do. And that changes everything. Because the US tax system treats income differently than wealth. And this is where most people get trapped without realizing it. You spend your life trying to increase earned income, while wealthy people focus on building assets that get taxed completely differently. That sounds small. It's not. It's the entire game. Let's start with something almost nobody notices. If you make $80,000 a year from a job, that money gets taxed immediately. But if someone owns a business, or owns stocks, or real estate, their wealth often grows without becoming taxable income right away. That means two people can become richer at the exact same speed, while one gets taxed constantly, and the other delays taxes for years, sometimes decades. And this is the part nobody talks about. The tax code was largely designed to encourage ownership, not labor. The government wants investment. It wants businesses. It wants economic growth. So it rewards certain behaviors with tax advantages. That's why business owners can deduct expenses. That's why long-term capital gains are often taxed lower than salaries. That's why real estate investors use depreciation. And most working Americans never learn any of this, because they are too busy surviving monthly bills. Now here's where it gets worse. A lot of people think the rich simply tide money. But many of the biggest advantages are completely legal and visible. For example, imagine two people each make $1 million in economic gain. One earns it through salary. The other earns it because their stock portfolio increased in value. The salaried worker gets taxed aggressively almost immediately. The investor may not owe taxes unless they sell. That's a massive difference. And wealthy people understand something most workers never get taught. You don't always need to sell assets to use wealth. You can borrow against them. That sounds smart. Until you see what happens next. Let's say someone owns $50 million in stock. Instead of selling shares and triggering taxes, they borrow money using those assets as collateral. Now they have cash to spend, without technically creating taxable income. That's one reason headlines sometimes show billionaires paying surprisingly low income taxes. Because legally, their wealth and their taxable income are not the same thing. And if you're still watching, this next part changes everything. The biggest advantage isn't just lower taxes. It's time. Wealthy people often keep assets invested longer, which means compounding keeps working. While many middle-class Americans are forced to constantly interrupt compounding just to survive emergencies. Car repairs, medical bills, credit card debt, inflation. So the real problem isn't simply that rich people pay less tax. The deeper problem is that most Americans are stuck in systems that prevent ownership from growing in the first place. That's the twist almost nobody sees. People think the issue is tax percentages. But the real divide is access to appreciating assets. Because once you own assets, the rules around money start changing. And this creates a psychological trap too. Most workers are taught to focus only on earning more. Get another raise. Work overtime. Pick up a second job. But income alone has limits. There are only so many hours you can work before burnout hits. And inflation quietly destroys the value of stagnant cash. Meanwhile, assets like businesses, index funds, and real estate can continue growing even while you sleep. That's why some people feel like they're sprinting financially, while others seem to get richer effortlessly. But here's something important. This doesn't mean normal Americans are doomed. And it doesn't mean you need millions of dollars. Because the biggest mindset shift is understanding the difference between consuming income and building ownership. Even small asset ownership changes behavior. Owning part of an index fund. Starting a side business. Building cash flow instead of only relying on salary. Those decisions compound over years. And honestly, most people underestimate how powerful small ownership becomes over a decade. But the system also creates another hidden problem. Fear. A lot of Americans are terrified to invest. Terrified to start businesses. Terrified to fail. Terrified to lose money. So they stay inside the safest financial path possible. Even when that path slowly keeps them stuck. And corporations understand this psychology extremely well. Predictable workers keep systems stable. But ownership creates independence. That's why financial education matters so much. Not because everyone will become rich overnight, but because understanding the rules changes how you make decisions forever. And this is where things become uncomfortable. Schools teach people how to work for money, but rarely teach how money itself works. Very few classes explain taxes, assets, cash flow, investing, debt leverage, business structures. Yet those are the exact systems shaping modern wealth. So millions of adults enter the real world financially blind. Working hard, but playing a completely different game than wealthy investors. And by the time many people realize it, years are already gone. That's why this topic creates so much frustration online. Because people aren't just angry about taxes. They're angry because they feel like they followed the rules and still fell behind. And honestly, that feeling is real for a lot of Americans right now. Housing costs exploded. Healthcare costs climbed. Groceries got expensive. Debt became normal. Meanwhile, social media constantly shows luxury lifestyles that feel impossible to reach. So people work harder. But harder work alone doesn't automatically create financial freedom anymore. And that realization hits people emotionally. Because it forces a painful question. What if effort alone was never enough? But here's the good news. Once you understand how the system actually works, you can start making different decisions. Not overnight. Not magically. But strategically. Start learning about ownership. Learn how taxes actually work. Learn how investing compounds. Learn how businesses create leverage. Even small steps matter. Because the goal isn't to become the 1%. The goal is to stop spending your entire life trapped in a system designed around permanent dependence on earned income. And maybe the biggest lesson is this. The wealthy don't just earn money differently. They play a completely different game. And most people were never taught the rules.